Man, yeah, that's some smooth jazz right there. That's what I'm talking about, man. You need to live the brand, man. Live the brand. Hey, welcome to the Closing Beat, everybody. How you doing up there? Hope y'all are having a good day, and welcome. We are financial advisors here at Jazz Wealth. We love talking about the stock market, and I ask you, since political season's over, I'm gonna ask you, try to find another advisor that can talk and teach with the way that we do. You know, the things that we cover, the education that we do, the broad array of different topics that we cover and try to teach. And yeah, I don't think you're going to find too many of them out there. There are some, but we're going to continue on that here today and help you guys out. You know what I mean? I got to say that we're done with the game here. So Mike sent in this game a while back. It's bingo, but it's do-o. And it has all the sayings and phrases and things that I would normally say. And by the way, there were numerous cards. We didn't even use all of them because there were too many. So he had sent those in, things like when I say, it's not Justin, it's Dustin. I love me a good pullback, right? I taught a class on that. If it affects your dough, I love it, man. Nest egg, all kinds of stuff in here. So we're done with that, but that was really cool. I know we shared this before, but now that they're all done, we wiped them out. Just thought that'd be kind of cool to share with you guys. A little game of bingo, but do-o. Very, very cool. Anyways, S&P here today. It's a gap and go type day. That's what they call it. It is a gap and go type day. If we go over to the charts, unfortunately, gap and goes can happen to the upside and the downside, right? So today was to the downside. And if we're looking at the S&P, we'll just basically go to where the market's open. This is the futures market that I'm sharing with you here at the moment. And hopefully all that works. Everything sound good to you? That sounds good to you. So we go over here about 9:30 where the market's open. We gapped lower. And the way to share that with you is like this. All right, we'll come on over to this ETF here. Well, I use the SPY, right? So here's the start of the day. That's the gap that we're talking about, right? Gap and go, right? We just keep going to the downside. Just pressure. That would not relent throughout the day. It's just sadly the go was in the wrong direction there. Super cap stocks, they were the big focus here today. We'll cover a lot of the stocks in the news, but big stocks, Apple, Amazon, Tesla. Tesla down 7% on the day. Amazon down 4. You got Apple down 3, Microsoft down 2, Alphabet down basically 2. And so that's the big weight. We talk about the weight of the market. Meta actually had a good day because they're firing people. I mean, that's not funny, but that helped the stock go up there. But that's what you have. Now, midterm-wise, kind of uneventful, right? Basically, when you add it all up, still kind of uneventful. We're still counting votes out there. But I want to share with you, before 1970, the stock market was actually closed on election days. I don't know if you knew that. There's a couple interesting facts there. Usually the 3-day, what would be a 3-day change through the election day, was positive. Actually, it only fell twice, 1978, 1994. So this is already off to the wrong start historically, right? We are so far leading up to the election there and now the day after, we're still right on track with those stats, even though today was down there. The day after election day tends to be positive. However, I should say that the day after we know the results, right? So that's the day after we know that it's all done there, not today, right? That's what I'm trying to say here. Tends to be positive and tends to grind forward going ahead. I do want to share something with you here. So if we look forward, I'll go right here. It's not going to work. There we go. Just a little behind today. This is the S&P on the charts there, but going further out in time tends to be very bullish after midterm elections. So if we take a look at the actual forward performance there, go like this and pop it up. We have the day, week, month, 3 months, 6 months, and a year. It is very positive. Now, the time period of the day through the month tends to be a little bit choppy, right? So in that first little time where maybe votes aren't being counted, everything's a little bit tougher to understand there. That tends to be choppy, slight bullish bias there. But when you start getting out into that 3 month, 6 month, and year time period, 6 months through 1 year, 100% of the time the stock market's been positive after the midterm election. So it doesn't feel like that today that should be the case, but we're talking that 6 month to 1 year period. Average gain 6 months later, 13.2% and positive 100% of the time. And then looking out a year later, 13.4, again, positive 100% of the time. So really rather interesting. At least something positive that we can look forward to, hopefully, with the stock market. And it's the holidays and all this stuff that's going well. We have inflation numbers coming out tomorrow, so that could certainly be helpful as well. We will see what happens. Now, if we take a look over at the, I'm trying a different way of showing this. So this is every sector in the S&P, all of them listed. Their year-to-date performance would be up here in the corner, and then the largest weightings. I'll start with energy because we know that is the only positive sector right now. Energy with a 67% gain. Then what we did is we put the 6 largest stocks in that sector. Whether they did good or bad, we just put them there so you could see it. We know ExxonMobil, Chevron, ConocoPhillips is in 4th place there. All of these driving the gains in the energy space. You might be able to figure out pretty quickly that in communications services, you've got the big names, Meta with a big sell-off this year. Remember, this is year to date. T-Mobile standing out as one that is able to buck the trend there a little bit. So if you're looking for relative strength, you can look on here and look at the green stocks inside of the red sectors, right? So if we go to industrials, which by the way leads the way over the last month here, but if we look at industrials for the year, down 8%, Lockheed Martin bucking the trend. John Deere bucking the trend there. And then Raytheon, not as much, but still respectable there, bucking the trend. Weakness coming from UPS and Union Pacific and other rails as well, right? So that's one thing to do. If you're looking for discounts, this is a quick way, and if you guys like this, we'll continue doing this. If you're looking for discounts, you go to a weak sector and find the weaker stocks. Now, these are the biggest. These are the top 6, so you're picking on the big dogs in this sector. But for example, NVIDIA is one of the weaker stocks that is the larger stock inside of the technology sector, Taiwan Semiconductors, really a lot of semiconductors if you want to dive through there. But I thought that'd be a different way to share it with you, and maybe, I don't know, maybe that moves the needle. Maybe that gets you excited and you keep coming back and watching more and more. As far as some of the stocks in the news here today, I've got a funny story that I told you I'd share yesterday, and I forgot to share it, but it has to do with Disney. Let's talk about their earnings here first. They beat on subscribers. Actually, a pretty decent earnings report. And if you notice, a lot of analysts actually said, well, this is a buy, right? We weren't sure before. This is a buy now on this discount. Trending well in terms of subscribers, moving higher. ESPN beat again. That's kind of their dog in their portfolio there. Revenue missed by 5%, earnings missed by 42%, and a lot of that had to do with costs. Their Netflix was spot on the other day when they said, we suspect that these other streaming providers are about to figure out how expensive it is to actually produce and have content put on their platforms. They were right. Parks and experiences, that was a big miss there. And I thought for a minute, how is that possible? Because that's really where a lot of the excitement came from on the downside here today. They missed by 21%. So parks and experiences is a segment. They have streaming, they have their traditional media, they have parks and experiences. That's, you going to the park, you going on the cruises, you doing things like that. Missed by 21%. How is that, right? Everybody and their mother is at Disney World. So what happened there was costs for them. They've had to raise their prices, of course, but costs were a problem. But the big chunk was the Disney Wish cruise ship that came out there. Lots of costs to get that sucker up and running there. As far as content goes, they expect $30 billion in content costs for 2023. What's that? No big deal, right? And they said, although that's going to cost us more, we expect to offset that and be profitable by 2024, that our total losses will peak next quarter. Right? So, we'll see how that plays out. But if so, then you're finding yourself a discount on a stock that's likely to or a company that's likely to start turning the corner in terms of costs for the streaming services there. So I don't know, interesting. I'm a Disney fan, a Disney Parks fan, so that's why I follow things like this. I typed the wrong ticker symbol there. Go to Plug Power there. Revenue up by 32%. Didn't seem to matter for the stock there. They still missed their estimates overall because of cash on hand. With this company, cash on hand is a big one. And cash on hand, 13% lower than expected for them. So no bueno. Loan Depot, you could imagine, right? I looked at this one because I wanted to know about the mortgage market, right? Mortgage applications actually stopped falling. They actually broke like an 8-month streak in a row. They stopped falling, although they were only up slightly. They saw a huge mortgage slowdown there. Revenue down 70%. Their total loss was about twice what was expected. And you could probably imagine, it was going to be bad, but just a good look at the mortgage market and how, it's slowing down, right? Boeing. This is largely priced in here, I would agree already, but saw 122 new orders for aircraft, 0 cancellations. Well, that's good news for a stock that's trying to come out of a really pretty long-term bottom there. 0 cancellations. That's the first time since COVID that they've had 0 cancellations. They delivered 35 aircraft in October, 22 737 MAXs, 6 787s. They do have quite a backlog. I mean, years, almost in some cases, decades, backlog for airplanes there. Meta in the news as well. That was helped continue the rally there because they're firing 11,000 people to start. That's where they're starting, they say there. So we'll see. Dr. Horton, got to talk about Dr. Horton. This is interesting. So Dr. Horton, order cancellations, meaning orders for new homes, cancellations, up 32%. That's the worst for them since before the financial crisis, 2008. So it gives you an idea of how rapidly things are changing out there. Anyways, average selling prices are down. Just lots of bad news for them. But I ask you the question, why isn't the stock falling? Why aren't home builders falling? They've been remarkably strong relative to the stock market, of course. They're outperforming the stock market in the short term, but they're also holding up. This bad news isn't slamming stocks. It's not hurting the others. They have bad news too. Home builders are sucking wind right now. Why isn't that a problem, right? These guys, this is what we talked about before. These guys are super smart. And earlier last year and a little bit into this year, they said, we see it coming, right? They were the ones that got it right. They're the Michael Burrys that said, we see the housing market slowing down and we're going to go put this into action. We're going to stop building new homes. We're going to leave land vacant. We're going to reduce our total inventory for sale. They nailed it. So they took the beating ahead of time by waving the flag saying we're in trouble here. And now that there's actually real trouble, okay, we've already priced it in, right? It's already good to go. So kind of fascinating there. Another fascinating one, and I'll wrap it up. We got Wendy's. Very interesting pattern here. If you like are you a cup and handle guy or a girl, the technical analysis people, cup and handle right here, looking like it's trying to break out. They beat on earnings, but it was kind of a trick earnings report because they bought 93 franchise locations here in Florida. So adding that to their bottom line and top line, of course, helped them out there. But remember, fast food in general does well in high inflation. People gravitate towards cheaper, maybe less healthy foods because of inflation. We're not eating as well. That is very common. There's nothing new about that. Okay, don't let me forget. I'm going to come back to the Disney story. You're going to love the story. I'm not joking around. It's a really, really funny story there. But let me cover a few other things here real quick. Going over to the charts, I do want to point out, and then I'll share this with you. I mean, I laughed so hard at this. Okay, so we got the NASDAQ here, still sitting around 30% down year to date. About half of that came in the last 3 months. That's this guy right here. So down 18% in the last 3 months and getting weaker. The big guys. That's the big guys and the semiconductors taking you down there, just so you know. In the Dow, it's actually flat over the last 3 months, and it's still the best performer year to date, only down about 10%. This is largely due to energy and healthcare. Chevron is the biggest contributor to the Dow's gains so far this year. Then you have names like Amgen, that is the second biggest contributor. You have United Healthcare. In the healthcare space, that is the third. Travelers Insurance, and lastly, we have Merck. You can see the rallies on all of those as I share them. Those are your outperformers. They are definitely not the dogs of the Dow. Our wine and wealth last week. The Augusta rule. Not only did we explain the details and show you step by step how you have to do this if you want that tax-free income, but we also created a package for clients so that if you decide to do this, you can count on our package to say, I need to do this, then I need to do this, then I need to get the check, then I need, excuse me, then I need to pay the IRS, and specifically, how do I do it? So be sure to check that out. As of now, we have a hurricane. Again, it'll be a tropical storm by the time it hits us. So there may not be a wine and wealth tomorrow. If it's not horrible, we'll get something done. But we're kind of thinking maybe, if some light power outages and stuff, we'll be fine. But there may not be a show either if it's kind of wild. Right now, it's windy as can be. The rain's coming and going. But we're not supposed to get hit really hard, just be kind of a bad storm for a while. So just giving you a heads up, if you don't see it, that's why it is. We will all be safe. We'll be just fine. Gold. So after testing lows multiple times here, let me go over to the chart so you can see it. We tested lows multiple times here, and it's finally breaking out of a downtrend. You can see it. I won't draw the line, but you got a nice downtrend. We break out of the downtrend. We're essentially up about 5% in the last 5 days. No doubt this will be a mover tomorrow with the inflation numbers coming out. But is 5% a day, 5% over 5 days, is it a big deal? Do we want to start paying attention to this? Is this now something that's going to respond and be fun to play? You got gold miners doing the same thing. I'll use GDX. That's the question. Is it a big deal? If you're a research member or you are a client, go on in. Take a look. You can run it. I used the GLD. I said, how often? Rolling search. Show me every rolling 5-day period where the performance is greater than 5% over 5 days, and I look back 20 years. It is nothing to talk about, right? Normally I'd point out the things that are interesting. This is a whole lot of nothing. So the fact that gold is up 5% in 5 days means nothing. It does that, and it tends to really not do a whole lot going forward, right? So only positive about half the time. The average performance is basically flat, so no gain, no loss. Median performance is the same exact thing. It's happened a total of 93 times over the last 20 years, and nothing comes of it, right? So sometimes I like to share that stuff with you as well, so you can come back and say, oh, that broke a downtrend. Should I be looking for something in the next 5 days? Probably not. The stats say there's just not much that's going to happen to you there. Let me move on. We're going to look at bonds interest rates attempting to move higher earlier in the day, and then they gave you a little bit of a break. It's trying to break its downtrend here as well. And basically the dollar, there you go. The dollar's still fighting off this pullback little by little. It's a choppy pullback there. I would argue a bullish pullback for the dollar there so far. I do want to point out crude oil real quick. You lost $3 in crude oil today as that one fell. Oil inventories showed excess inventories, which basically means we're either slowing down or we're awash in oil. Which one is it? Is the economy slowing down and we're driving and using oil less, producing less? Or do we just have too much oil? Is that an easy one to guess? Okay, and lastly, I want to show Bitcoin. Got down to the 15,000 mark, lost 3,000 points today. Actually, it hit 14,925 actually. So the crypto winter, which started over the summer, continues to be pretty poor there. But I'm not a crypto person. I just pointed out for you guys. You probably already know it fell apart, but that's where we stand. Okay, funny story, and then I'll take your questions. You ready for this? You ready for this? I don't know. Like this is a good one. So you know I like my Disney parks and stuff, right? Well, here's what happened. This happens at Magic Kingdom in Orlando, right? And we'll let that catch up for just a second there. So in Orlando, there's a guy, right? And he's a federal agent. And this federal agent is on vacation. He's been hunting down this guy in New York for a year, signed his arrest warrant, been trying to find him, went to his mama's house. Mama said he ain't turning himself in, so, right? Whole thing. The federal agent goes on vacation and he says, I'm gonna go to Disney World, have a good time. While he's on vacation, he's walking around Magic Kingdom and he notices a guy that has an H on his neck, a tattoo. The fugitive that he was trying to catch has an H on his neck. And he's like, man, what is that? So he starts looking at this guy further. It was the guy. The guy happened to be at Disney World on the same day that the federal agent that was trying to catch him was there as well. It was a year. So get this. They let the guy continue to go about his day in the park. They didn't arrest him until he left the park. So he got a day, you know? He got a day in the park. He got to hang out, promptly arrested and put in jail. I mean, come on, there's some Disney news for you for the day. That is crazy. Man. Anyways, I'll take your questions if you have any questions there, and we'll see what we can do to help you out. Otherwise, I'll wrap it up. Gold is a snoozer. Yeah, that is true. I will give you that one. I admit that one there. It's supposed to be an inflation hedge. How disappointed is everyone that used gold as an inflation hedge? Use silver. That's not much better, but use silver. It has industrial uses that far exceed gold. So at least there's a way for that. Yeah, it is crazy, man. Yep. Kramer said the CEO should lose. I don't like the CEO myself. I was a bit of a Bob Iger fan. I don't much care for the Bob Chapek, but yeah, that's it. Yep. And the tickets are expensive. Yeah, it's kind of like buying a drink at the airport, right? You don't complain about it. You're there, like, do you want the drink or not? You don't have to get the drink. And I see that. People complain about the Disney tickets, but it's like, you know, people are still going. If it was your business and you had that level of demand, you'd probably do the same thing. Yeah. I saw Kramer had a tough run there with Meta. That is a tough one there, but you know, that's going to happen. Criminals went to Disney World. Yeah, he should have been leaving the country, yet he's like, hey, they can't catch me. He was there under a fake name as well. It's stolen identity. Yep. How about your oh, what happened there? I didn't look at Cardinal Health today. What you got? You get a little bit there. Oh, it's floating around. You like that. You like that, though. You got 2 days left, and it's not teasing you. It's extended, and the market's weak. Tomorrow, if you can get through tomorrow, you feel a lot better, because tomorrow is CPI report, right? Core CPI is the big one. Everyone's going to be looking at core CPI. My guesstimate was 6.47%. We'll see what happens tomorrow. I wish the best for you. I hope it stays just nice and quiet until then. Yeah. Yeah. JW, you got WD. You want to sell it? You want to sell that? Oops, typed the wrong symbol there. You want to sell that sucker after the bad earnings there? What? Is it past like where you want to hold it or something? I don't understand why you would use earnings to make that decision. So usually you would buy a stock and say, I'm willing to risk, 20%. If it falls 20%, I'm out. And then you size your position accordingly. I'm willing to risk 10, whatever it may be. Usually people don't buy a stock and say, if earnings are bad, I will get out, even if the stock goes up. So I'm a little unclear on that one. It's a tough one to hold, though. I'll give you that. Broke to new lows, consolidated for a month, and now it's breaking to new lows. When is Carvana going bankrupt? I hope they don't, to be honest. I'm not really a car person besides old classic cars. So when I need a car, I just buy whatever on Carvana, and I love it. Everything about that. The time you save, used to be good prices there. I hope they still stay around, but it's not looking good for them. They had what's known as kitchen sink earnings report that they put out there. I should say what the cool kids say and like us to smash that button. Nah, I'm a boop guy. You go up to your dog, boop. Do that. Do that to the like button, right? Boop. That'd be great for me. All right, I'm going to wrap it up there. We're going to go, do some things, make sure wind doesn't blow away everything here again. And we may be here tomorrow. I mean, I'll try to do my best and be around with you guys, but if we have some power issues or whatever, we'll just wrap it up for the week, and maybe we'll try something on Friday or whatever. But I wish you a good rest of your day. Thanks for hanging out with us, and see you later.